Good morning, everybody. Welcome to the Flow Show. It's Friday and nearly time to just close the fucking door on the week, to coin a phrase, one of the best phrases probably ever uttered by a central banker. Morning, Kay. How you doing, mate?
Morning, right. It is right up there, right? It's right up there with Draghi, whatever it takes. And then I recall back in the days where the euro was created and Pim Duisenberg was the first ECB governor, and saying when the euro dollar was cratering from its opening price around 118 to below parity, he was saying, yeah, euro is going down, but its internal value is very strong. So
Yeah.
it's right up there what he did yesterday. Well, I just can't unhear it.
Yeah, I didn't see it live, obviously. It must have been something just to hear that live coming out. But yeah, fantastic.
Yes.
I wonder if he'll be forced to issue some sort of apology or something, or that's
Yeah,
definitely coming
maybe.
up probably in the next FOMC
Yeah,
presser.
or saying it wasn't fucking but frigging or freaking or
Yeah,
has me done.
freaking. Yeah, they love a bit of freaking over in America, don't they? Anyway, good entertainment, and we'll obviously touch upon what Powell said, the important parts, or what might be considered the less important parts to what he did say. Right, so yeah, let's get into it. Our mates at the PBOC say they will promote direct yuan trading against foreign currencies. So they're going to be, just a note that they're going to be expanding on the use of the yuan versus other currency. You know, we've got people like South Africa getting more into it, India, that sort of thing. Haven't heard much comments in a while about that, but the PBOC deemed it necessary to bring it to our attention again. Over in Japan, Kishida's cabinet has approved the 87 billion extra budget. That's just his cabinet. It's now obviously got to go forward from that point, and any bum fights to come. However, does say that, or a headline yesterday said that Japan is looking at potentially a 5% plus wage hike as a condition for tax breaks. That's according to Sankei News there. So some elements, because they are talking about some tax cuts, they want it to be matched off with 5% plus wage hikes. We'll see what that comes. That goes into the wage negotiation pot to come. Suzuki and Powell's still remain pretty quiet on the FX front. I haven't picked up any comments. I don't know if you have, Kay. Any of the big wigs talking about the level of the yen again, but he was out with a comment last night and not saying anything about the level, which is a bit surprising. I thought they might have been popping up this week, given we're heading and now over 151.
Yeah, their silence is deafening. Huh? It's I still think the alert level hasn't come down, because the last lines we heard from Canada, they were talking about that speculation. And in the meantime, the yen's trade weighted index is plunging every day. Well, plunging is a big word, but it's just weakening every day, and we are way beyond last year's interventions levels. Below, I should say. Yeah, it's an open question. I was secretly hoping, because my call expires today and I fully hedged it, that they may intervene and give me a chance of buying it back a lot lower. But I suspect, well, right now we have to assume that there's nothing going to happen before the weekend, unless we have that push into up into the 152, perhaps. The thing is, if we take them literally, because Suzuki also said about the speed, if we take them literally on that, they have no reason to intervene, because you don't do those 200-300 points every day. So we really, it's pure guesswork still, right? Wet finger up in the air. They can intervene every moment. Last time in November, I think it was just after the New York Open of the markets. So if I recall correctly, it was around just after 2:30 p.m. our time. I don't know. Friday is as good as any other day, and any level is as good as any other level. But as you say, their silence is remarkable.
Yeah, I wonder if that puts a bit of risk onto early Asia Sunday when things open up over there. Maybe they decide to send out a few submarines again or something, just to catch the market on the back foot. But we shall see. But yeah, I think they need to see what goes on the rest of today. But you saw those. I'll see if I can put them back up again. You saw those arrows. I was talking about this in the chat room. We're up at the levels where I started shorting it last time. The last time I started shorting it was in this move, which was a lot of end of month. You know, the dollar was really ramping. We had the yields playing a part in that, and then we had a neutral FOMC, and it was still rallying. So that's why I thought, oh yeah, I'll try a short up on that move. And it wasn't looking too hot when it was trading up in 70s. But anyway, but you can see the difference in speed. That was a fast move, end of the month, that sort of thing. This is a definite grind. This isn't a move that you think, yeah, it's gone up hard and fast, it's going to come down hard and fast as well. This has got the potential to build into something, maybe another break. We might get something similar to the 150 where we had a grind up, then we just bumped along before eventually breaking. So I was thinking maybe having a little short up here. I don't know if I'd do it for a weekend trade and leave it on over the weekend if we test up those highs again. But you don't want to be really in a position over the weekend and wake up and it just starts grinding again on Monday. So I'll see how it goes. I might have a little short up against the 152 just for a first touch. But otherwise, I'm not liking this move as much as I liked that move to try a short against it. And we're still not getting any reasonable dips to get into. If you want to long this one, it's a bit of a jump in and shut your eyes and hope for the best. And that's not the best trading strategy in the world.
But unless if you want to have a punt, because you're really taking a punt on possible interventions, right?
Yeah.
Unless you want to have a punt, and if for those who can trade options, the vols have gone down a lot. So if you look at stuff like around an overnight put around 151 is actually costing very little. Or even if you think it's really interventions possibility right after the weekend, a put at 150.5 is really costing just well, really cheap actually. And I'm thinking of perhaps doing that once my option has expired this afternoon.
What's buying like a 150 or 149 put or something?
150.5 should cost no more than 6-7 pips or so.
Yeah. Yeah, that's might be worth looking at.
Because if we don't have anything and you're short, what's your expectation for it to come off? That's the question really, right? And depending on where we end, of course, in the bond market today, etc., blah blah blah. If the yields come back off, you're probably going to make a few pips on your dollar yen, but then you're going to make as much on a long euro dollar or perhaps I don't know, something else, short dollars where there is less of this grind or where there is a bit more reason for a bounce. I'm thinking about like actually perhaps euro dollar also because it's just so resilient through everything.
Yeah, that is. I'm going to point that out shortly, but yeah, it does seem to be holding up a bit better than the others on these moves. But we'll get into the moves after we got through the news and stuff. The RBA had their statement minute thing out on their last meeting. They said that they saw a risk of upside surprises in inflation within their outlook. That was measured by them raising their outlook or their forecast for their trimmed mean CPI. This is the one they look at, and now see it rising 4% in the year to June 2024 versus 3.25% previously. So a hike. That's hiking that inflation forecast is what's getting them a little bit more on the hawkish side. Back in Japan, I missed this one. The business lobby, or the head of the Japan business lobby, Nami, has urged the BOJ to normalise a policy to live with interest rates. wants to get everyone ready for living with interest rates and the Bank of Japan on their way. So again, it's just a change in the sentiment of what's going on in Japan, getting ready for the eventual hopeful hike of rates over there. Over to the Norges, and head of the Norges, Becker, says that the bank doesn't have a policy target for the krona. See what they're doing getting up to with their FX stuff, but they don't have a particular target for that. Coming over to some of the data, UK GDP out this morning. Bit of a surprise. Well, a beat of expectations. Woohoo! You cry. It came in flat instead of down 0.1%. As I mentioned earlier this week, particularly on Face, when Blake was asking what's going on with the UK economy, I said it doesn't really matter whether it's minus 0.1, 0.2, plus 0.1, plus 0.2. It's all very anemic numbers. And as you can see, they're flat growth for the quarter. Year on year, matching last quarter's numbers, beating expectations by a pip, 0.6. Nothing to write home about in any of this. The only thing that was potentially a little bit better, or at least not worse, was the industrial production numbers. They came in beating expectations year on year, flat on the month. Manufacturing as well, not as high as expected, but still a positive number. Year on year, matching the prior number, just missing expectations. So it wasn't an outright collapse. This could have led to a bit of negativity more in the GDP numbers, but it hasn't. As you can see, the rolling 3-month GDP at 0% because it pretty much matches the quarterly number. Trade balance as well, the deficit a little bit better there. I haven't checked the numbers exactly on that one, so I don't know what the import situation was like. I'll check that out. I shouldn't deem it to be anything too hot. From that, let's just check back to some of the data from yesterday. Jobless claims as well. There or thereabouts again in the number, 217 from 215 expected, 220 prior. But that continuing claims has ticked up again and continues, as I said, to move higher. So that might be a little bit of cause for concern, but not at these levels, not ticking up, 14, 10 grand here or there. Start getting above the 2 million mark, and then people will probably sit up and take notice of that. Right, back to the ECB. ECB's Wojcik says it's too early to think about rate cuts, and the ECB must be ready for either hikes or cuts in 2024. Going to hear a lot of division amongst all these central bankers at the moment. ECB Centeno says we are at a plateau in terms of interest rates. So he's one of the doves there. BOC's Rogers. BOC is not talking yet about rate cuts. Over to the Fed. This is where you're really going to hear the divergences popping up. Fed Goolsbee says the Fed will need to monitor the risks of overshooting on rates. Fed Barkin says that anecdotal evidence is at odds with the latest GDP report, as he sees a slowdown coming. Says the Fed needs to lower inflation further. Whether more from the Fed is required remains to be seen. He's not convinced inflation is on a smooth glide path to target, and says he has a hard time declaring sufficiently restrictive. That term, it's the new term for the Fed. Fed Bostic says policy is likely sufficiently restrictive. Fed's Bowman says that she expects further hikes in rates will be needed. Fed's Picey says that it's too soon to, or Pacey, I think it's Italian anyway. Fed's Picey says it's too soon to rule out further rate hikes and declare victory on inflation. So someone who's not sufficiently restrictive. And then we move on to the man himself, Fed's Powell. Well, again, mixed messages. Mainly the slant was a bit more hawkish, a bit more stronger in we're keeping rates up, trying to snuff out, rate cut views and sentiment. He said he's not confident we've achieved a sufficiently restrictive stance, but then later on in his comments said policy is probably significantly restrictive. So sitting on the fence with that one. Then added, will not hesitate if tightening becomes appropriate further down the line. We'll continue to move carefully and make decisions on a meeting by meeting basis. Still trying to judge if more needs to be done, and we'll consider how long to keep rates high. The bigger mistake remains not getting rates high enough. So as you can tell, it's a bit more hawkish there. Said he's attentive to the risk of stronger growth could undermine the inflation progress and warrant a monetary policy response. That's something I've been saying for a while. The only real reasons why the Fed may go into another bout of hikes is if inflation starts jumping again, or the economy runs hot enough that they get worried that it will bring further inflation, and that causes them to hike. So he's remarked on that particular point there. He says the US economy has been stronger than expected, and says this year has been remarkable. But GDP growth is seen moderating in the coming quarters. Whether that happens, though, remains to be seen. So they're forecasting it, but they're going to have to see if that actually happens. The Fed will not ignore significant bond tightening, but we do not have to make a decision now. So eyes are peeled on what's happening in yield markets, and they will move if they deem it. The moves are, I won't call it destructive, but out of kilter with the fundamentals. Speaking of yields, and okay, I don't know if you noticed this, you watched this live, the 30-year auction was a bit of a crappy one again. Yeah, bit of a crappy one again, lower demand and a higher price asked by investors on that. What was your reaction to that one?
Shocker of an auction. Shocker of an auction. Yeah. We could also argue about the when issued price, because because it's a new auction and everything. So 30s were trading around what, 472.5. They came up with a when issued at 471.5, 6, 471.6. And then the auction, actually the high yield was closer to 477. But yeah, the bid to cover was lower. The primary dealers had to go more to the auction because very little other people. Well, if you look at the percentage compared to what is usual, or what we may have expected if the bond market is really okay now to start to buy bonds. So no, it was a shocker. I mean, it's a humongous tail, more than 5 BPs. Was a real bad one, and that is the reason really why the dollar started to, how should I say, turn or at least gravitate higher again. It was because the market was expecting it to be a pretty decent auction, a bit like the 10s, which were lukewarm but okay. But this one was really a bit of a shocker, and that's and then that famous line about Powell in his opening speech at the IMF event, saying that he's not sure they are tight enough yet. That combined sent the dollar a bit higher, and those yields higher. The 30s went like, I think 11 or 12 BPs more expensive at one stage compared to where we were before the auction. Pretty decent move. So yeah, that tells us that we still have to be very cautious, and that it's not a done thing yet. That let's say the money that is resting now in reserves and money funds are ready to go to the bond market. So yeah, it's still very uncertain, this situation. Now,
so to put it in sort of layman's terms for people, you know, we have got the Treasury looking to raise, you know, a lot of money, far more than they were before, to fill some of these black holes from the fiscal stuff and whatnot. And it's not triggering investor appetite, and so that's why we're seeing demand lower. Doesn't necessarily mean it's a huge problem, you know, because there's so much more coming to the market. Demand might not match it. But investors are then asking for a bit more on top, a bit more of a premium to take that money. But even so, the average yield was still lower than the prior yield.
Yeah, but that was to be expected. That was expected as well. Yeah, the thing is really key is that are investors okay to go to all those auctions, and then we need to see the bid to cover higher and no or a very small only tail, because there might be tails because yeah, the treasury has to fund it, so the bond sharks will always ask for a little on top, but it's more like how is the appetite looking, and that was a bit of a shocker yesterday. This being said, it does not necessarily have to be a very bid for the dollar. What we saw is a reaction on the back of it in risk, which then sent the dollar higher. But we have to be a bit careful what we do with the dollar on the back of it. The combination auction and Powell was a bit bullish dollars, but only the auction doesn't mean that it has to be bullish dollars. In a first instance, yeah, as it sends risk lower and yields higher, the normal mechanical reaction is thus. But it may also mean that foreigners are not really having a lot of appetite for US assets, and then it may in a second leg or a second wave, it may actually become a little bit negative dollars or more negative risk. So it's not a straightforward dollar trade, this one. Yeah, Ali, we have seen your yen trade, but we've also already commented a lot about the yen, and it's really a slow grind, this thing. But I don't understand your 41 purchase and your stop loss 140 points lower, take profit only 30 points higher. Is that a typo, the 150.01? Because that's
I was going to ask that. Is that 151.01?
Yeah, I guess it's 151.01.
Yeah,
it's still not a very good ratio for stop loss take profit, but well, it's a slow grind higher for the time being. There's not much else to say than it grinds higher. So yeah, could be a decent trade, but beware. And I hope your stop losses are protected if ever we would get an MOF intervention, because we are at levels where the risk is high. Okay, and yeah, so that's about it on that auction as well, Ryan.
Yeah, thanks, mate. I don't want to influence you at all, Ali, but I'm not a fan of parking stops just above or just below big figures, depending on which way it's moving. Personally, myself, I'd have the stop at 150.90 or 85 or something like that. If you're going to put it on the big figure, that's, you can see that's the level that holds if you come down that far. As I say, I don't want to influence your trade. I'm just giving you a bit of advice of what I would do around big figures and something like that. Right, yeah, that's it on the headline front. Is there anything you've got to bring to our attention, Kay?
No. It's been apart from those events we've been talking about, it's been very quiet. Huh?
Yeah. Right, well, I'm going to look at a couple of pairs because I was off yesterday afternoon, so I've done an awful lot. As already mentioned, Euro is looking a bit stronger than the rest of them. We're still having this move under 107. So that's going to be a watch point if we get up there again. Is it going to resist, or is it just going to become a bit wishy-washy? Obviously, typically it went the way after I got out my trade, but that's trading for you. So yeah, it's just holding up. We had a move down to 60s the other day, Wednesday, just nicked a new low underneath it. So a little bit of a crack of the egg there, but it's give or take, it's holding so far. So that's still your area to look at. Probably want to see a hold under 60 now to bring further downside. So we've got a bit of a 100 pip range to play in on that way. You can tell how the euro is stronger than the pound at the moment because cable's going down more than the euro is, and that's why euro sterling is now having another look up towards these highs. What it's done very nicely technically is held this level. This is what I've been wanting to see for a while, and I want to see it sustained. You've had a couple of goes at trying it, but they've always failed. Is this one going to fail as well? Who knows? But if we get a bit of a period of bouncing along here as support on retests, then that's going to give us the springboard maybe then to take on these prior highs and get up to my next zone, which is around the 85, 70, 90 area, and then up towards 88. So on the wider picture, as you can see, we're just holding this move now. We're keeping it going, keeping it bubbling, but we need to crack up above these levels here, and particularly this fib level as well, which we've tapped on again and haven't got through. Maybe then we push into this area of traffic and build a new range above the 87 level. That's what I'm looking for. Anyway, Aussie dollar, that's had a little bit of a breakdown. The 64 handle went yesterday, and I'm glad I got out. I got out my position for about 14 pips off my entry, just above 64. I was in 64.12. I didn't like it yesterday. I got out. That proved to be a good decision in the end. So this one is now stretching its legs further down. We've got a bit of an on-off area down into the 63, 40, 50 area. That's an area to watch. But through there, again, we're going to be seeing what happens down here in the low 63s, 62s to see whether we build support or whether we're going to make a fresh low and carry on the trend that's been ongoing. Dollar China quickly. That's it always looks like it's going to make the break for you, but as it's proven time and time again, these moves lower, particularly below that 728, have proved fleeting, and we're back up again. This, I think, is again more dollar than what's happening in China, so I might be a bit more inclined to start playing it around from another move to these highs if it's purely dollar led, because China were out with comments that they're going to keep an eye on what the yuan's doing and make sure there's no excessive moves in that as well. So I might start jobbing it around again in some of these highs while keeping my core short and waiting for a proper break below this 728 and then 725s. But just when you think it's going, it turns around and kicks you up the arse.
Yeah, I don't know if you saw what I posted on the Chinese yuan. I think yesterday, and maybe not yesterday, you didn't see it, but this morning as well, Ryan. I'm starting to look at that side as well.
Yeah,
I'm just hoping is not a strategy, but I'm just would like to see it back above that 732 from 732, 33s. I'm starting to think that we just may be starting to see or having seen the worst in China as well. There's also always also that only that much that you can price in, and in the meantime the PBOC is still very stubborn. I did read a couple of things about investors saying like indeed we may be through the worst. So I think if we see another move, I'd love to see a move higher again into the 732, 33, 34, and to start shorts as well myself.
Yeah, I think it was Meta stroke Facebook, whatever you want to call them, who said that there was a headline that they're looking to get back in China for the first time in 14 years.
Okay, I haven't seen that one.
Yeah, if that's any sort of indication for people getting back into China, then yeah, maybe there will be a bit more appetite from the West to get back into China. But yeah, they're not out the woods. We saw that from the inflation numbers. They're not out the woods at all. And they're still trying to talk up their GDP targets. So
yeah. Goldman already, but Goldman started to revise the GDP higher as well, forecast higher in China.
And we always listen to the
4.5. They went back to 4.8. I know. I mean, forecasts are what they are, but you know, I mean, it's not. It's what I always say. It's not that they are right or wrong, which is important. It's the number of followers that are important.
Yeah, the sentiment
say something
as well.
And you don't have any followers. You may be 100% right with all your forecasts, but it's not going to matter if you are only half the time right, but you've got I don't know, $500 billion behind you of money to be moved around. you can even be wrong. You're still going to move the market, right?
Yeah, exactly. Yeah, exactly. So, yeah. Anyway, I agree with those sentiments. We may be over the worst. I think there might be a bit more pain to come, but I don't think the market's going to be all over it, weakening the one like it was before. And definitely the authorities over there won't be looking to let it ride too far. Touch wood. We shall see. Kay, did you want to pick a few choice ones?
Yeah, I'm going to yeah. I have a couple of things to show. First of all, let's keep the tradition going, okay? So we had this move. These are the interest rate differentials, which I always like to show. We had this move wider again on the auction and Powell, but we are starting to creep back in these are the sterling ones. European ones are exactly the same. We had this move down over the auction and over Powell, and now we are starting to slowly creep up again. And similar is happening in the FX market as well. That's what I said. This is still like one big pot of net, really, the yield sphere and the bond market sphere, and differentials are not going too far from levels where we have been seeing them since September or August, really. The thing is, it's that's what I was saying earlier as well. Those moves that we have seen yesterday, it's very tricky and sometimes a bit complicated to trade the dollar on it for more than just the time of the event. And that's exactly what we are seeing again now, especially in stuff which is defying a bit the laws of gravity, like the euro, for instance, the euro dollar. And we have seen that the euro, despite crap numbers coming out for weeks or months, it's still a bit resilient. That's likely because of the size of this block, this economic block as well, and the market. A bit what we've been saying in line with what's happening in China. The market perhaps thinking that, okay, we've had all the crap data, perhaps we are through the worst. So the euro is not suffering as much, and we are seeing it on the euro crosses. Anyway, for today, we've had again a try around this 106.60, which has always been a bit of an area of interest. I'd say that for as long as we hold above 106.5, 106.45, stretch it to 35, 38.45 there. We're in a range. We're just in a range, and I would not even exclude that, seeing the strength of some of those euro crosses, we could even make it back to 107 or around 107.15, and then just sit there, depending on the Michigans this afternoon. Just sit there. I've already said it earlier in the week. It looks like euro dollar is very stuck to me, and the rest is gravitating around it. So that makes those euro crosses move. So if you want to trade dollars, I'd say it's perhaps better to find another dollar than the euro dollar, really. Cable, well, we've done all those failures and stuff. This is the breakdown yesterday, after the auction and after Powell, around 122.70, 75. But we're holding the underside of the trend line here in the low 122s. I'm going to say, and as the Michigan is doing anything special, this may be it for the week. But let's see what those yields are doing, because they are slowly creeping back up. What's a bit surprising to me, and and I don't really. Oh, this is only the 15 minutes, but the move on the back of those auctions, and okay, there's maybe Powell a bit in there as well, but this move around that we've seen yesterday, this move here, this is the auction, and then this is Powell on the short end. I don't know if it's gonna have many more legs, because data-wise, I'm not sure, and I think that's why also we are stabilizing now on the FX side of things, is that the market is more uncertain than certain about further developments here. It is a fact though that US 10s are holding this support zone and are moving back up into the 460s. I'd say we are back to kind of neutral. Get back down here, the dollar may suffer a little bit because it will be taken as, okay, this was just a recovery high, and we may start to drip lower again. We'll let the US decide about that this afternoon, I'd say. Same thing happened on the 30s. We had this move higher. Ryan already showed it. We had this move higher on the back of the shot up on the back of the auctions, a bit of Powell as well, and then now we are back inside a bit more of a rangy thing, and I'm not overly sure that it can really push a lot higher. We might have to wait until the next round of auctions actually for this starting to move again. Dolly and Ryan already showed. An interesting one here is dollar CAD. Despite a bit of a setback that we are seeing right now in, well, it's mainly euro again, right? That is going up. The rest is barely moving, and Swiss following euro as euro Swiss is stuck. This level in the dollar CAD is relatively interesting. Since Wednesday, we are banging our head up against this 138.15 zone. So I wouldn't be surprised if oil doesn't pick up more than what we are seeing now, or energy picks up more than what we are seeing now, that this thing may go for a little bit of a walk into the end of the week. It's of course driven by EuroCAD as well, but it looks as if we are going to have a little try here. If not, starting for next week, if started by next week we are still below this level, it may mean something. I just want to show the Norwegian kroner, right? Because we had this this overshoot on the CPI again this morning, and the Norwegian kroner is strengthening a little bit. Finally, some will say, but we are still very much in an uptrend here, right? As we can see. So as I was saying, people are asking about is it finally time to buy the Norwegian kroner, and people are constantly trying as well. I'd say be a bit patient, wait for the confirmation for this to turn around, because regardless of the higher CPI, and I think it's now baked in that the Norges Bank is going to raise rates again in December, because they really widely kept the door open over the last meeting, up to 4.5%, which puts them somewhere right in the middle, or even towards the better end of the pack of central banks. But first of all, energy has been coming lower a little bit over the past sessions, more than a little bit. And what is really important here is that the Norges Bank is still selling Norwegian kroner every day. So again, here I'd say pick your levels wisely. Wait, perhaps, if you really want to start to buy Norwegian kroner for last leg up, and then counter trade it. Respect this level around 12.0809. My line is a little higher, it's 12.08.5. But if it goes up, Euro NOK goes above 12.10, it's really not a good position. One that may be a bit better is the dollar Norway, because we have this May high is around 11.30. We're trading around 11.12, 13 right now, but we are starting to put in us lower highs here. All right, so this one may be interesting. Watch your sizes, because it's still, if you try to sell against this 11.20, it's still a 1%. Okay, it's still a 1% move. So watch out with your sizes, or as I'm saying, wait for perhaps closes. It's not that massively far away, this 11.0708 level. If you start to get below those levels here again, around 11.10, 11.0708, we may be in for a little bit more. Confirm it through 11 the figure, then I reckon we may have seen a really decent top, and we may see different levels. Okay, it's going a bit fast at times, so again, I can't hammer enough on the fact that you have to manage the size of your positions if you want to trade Norwegian kroner. Okay, but I just wanted to show the possibility here of something developing. Okay, for the time being, though, you have to know that we are still in this uptrend. So if those levels are starting to hold again, don't be a hero and try to fight it. Okay, so that for that. There was a question, Charlie. Euro sterling has risen after the positive GDP numbers out of. Can you explain why? Because we just said that for one, the euro is behaving pretty strongly, and again, it's rising against everything right now. And for two, as Ryan already said as well, even if those numbers beat, look at where they are. We are more or less flatlining, right? So yes, everything is not bad, let's put it that way, and the numbers beat a little bit, but then you have to put the numbers in context. Okay, and also know that Pill, for instance, earlier this week was who normally is a hawk. He was talking a bit negative about rates as well, or the possibility that the market is right to start pricing in rate cuts for the middle of next year. So all of this is keeping the sterling a bit under the cushion. That I showed those differentials, which are still hanging at relatively wide levels compared to what we have seen the past months. So that is it for the thing. And I see that there's a bit more comments.
Yeah, just Ali. I was going to answer Ali quickly.
I was not really going to show much more. Perhaps just the S&P, okay? Because that's now really a risk trade. Okay, we're hanging around those levels here. It's trading 43, 45 right now, down to 35, 45 here. We're on a bit of support here in the S&P. Okay, and some people may not like this this breakdown if it would happen. All right. On the other side, we are still above this latest little trend line break level, so it could just hold around here. All right. If you get a confirmation though below 43, 10, 20, this thing may give up the ghost for into the weekend. So we are on interesting levels here. Ryan, over to you, mate.
Yeah, thank you, mate. Ali's question is that his aim is to get 8 to 10% per month profit on his account, but he sees that he only gets 5 to 6% profit. What do traders aim for? I'm never one for targets, personally. Okay, there should be 3 stages in a trader's life. At the start, don't lose money. Second, make money. Third, learn to improve on making money. If you're making a good 5 to 6% profit, Ali, that's nothing to be sniffed at. If you're doing that regularly, successfully, you're going to compound your account and build it up. So, you know, your $5,000 account this year, you know, 15, 18 months next year at 5, 6% is going to be double, and then your 5, 6% is going to be on 10 grand, and you compound your account and you slowly, steadily build up your armory, you build up your account, and you make consistent money, and that's how you get the snowball running. What you want to do if you're making 5, 6% to get to your 8, 10% is look at your trades, your profitable trades, amongst other things, and see where you could have improved. You know, would you have improved those profits if you had not taken all your profit, taken half, taken 3/4, and then allowed the position to carry on? Those are the little bits that give you the icing on the cake, that give you that extra boost to your account. Okay, that's why I don't have targets when I get in a trade. I don't say I want to make 50 pips, 100 pips, 132.6 pips. I have my minimum. My minimum is get my trade to 0. After that, I then try and push for the profit. If I only make 10 pips, I only make 10 pips. But I'll try and make 10 pips, looking to make 20, 30, 40, 50 pips, because it's that boosts your account over your targets, if you like, or gets you to those targets. So yeah, 5 to 6% is nothing to sniff about. That's good returns. look at your trades and see what you could have done with those trades to develop them into 8-10% profits. That's the way you want to be looking at it. So yeah, and thank you very much, Horatio, for your kind words. Not a better way to start the trading day where you live than with the Flow Show. So thank you very much. And yes, thank you. This is the end of the week. Don't go shutting your fingers in any effing doors this weekend. Thank you very much for coming and supporting us here. Don't forget, please give us a thumbs up and a like on Twitter. Spread the word. Give us a retweet. It's much appreciated. The more people we get in here, the greater the conversation grows, just like in our chat room. And you know, the more advice and information you guys and girls get. Thank you as ever to the K-Meister for all his valued input as usual this week. That's it. Have a great weekend, everybody. See you on Monday.
Thank you, Ryan. Thanks, everybody, for being with us. Have a splendid weekend.
Cheers, mate.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.